very good morning to you. Many thanks for joining us today. I am Oyinpreye Krumale. Welcome to another edition of Just Africa on Sook News Television, the program where we spotlight transformative solutions shaping the future of the African continent. Today, we turn our attention to a silent revolution that's redefining financial inclusion across the rural Africa. Mobile banking solutions. Now, from the remote villages of Kenya to the farmlands of Ghana, from Nigeria's informal market to the savannas of Uganda, millions who were once excluded from the conventional financial system are now participating in digital economies thanks to mobile banking innovations, pioneering platforms like M-Pesa in Kenya, MTN Mobile Money in Ghana and Uganda, Paga and Opay, including MoneyPoint in Nigeria, and EcoCash in Zimbabwe, have bridged the gap between the banked and the unbanked. But how sustainable are these platforms in driving rural empowerment, reducing poverty, and promoting economic resilience? Today on Just Africa, we're unpacking how mobile banking is more than a tech trend. It's a tool for inclusive growth. Stay with us as we explore these challenges, the breakthroughs, and the policy frameworks that can scale these solutions, not just only in the continent where we're beaming our line, but specifically in key individual countries. We need to assess their work, their functionalities, their operations to see if this tech trend is really as a wildfire as it's painted. I'm not the only one on the show this morning. Good morning to you, Olumide.
Good morning, Oyinpreye. How are you doing?
I'm fine.
A great topic we're talking about.
Looking at today.
I remember when I was in secondary school, yes, we had the conventional bank, but you had to actually go into the bank, stay in the queue, long queues, just to withdraw something as low as 2,000, 3,000. It was quite hectic that time, but over time, we brought the ATM came in, and then the mobile money and all that, and it made transactions seamlessly. I think one of the benefits of mobile money is financial inclusion, bringing the unbanked, creating a solution whereby the unbanked can have access, to money, especially in the rural areas. It saves cost, it saves traveling. Some rural areas, even some places in Ibadan, because I stayed in Ibadan when I was in school. So the area where I was, there was no bank there and all that. So you had to take a bike and all that. And there was a time I remember way back also when I was in Abuja, I went to a particular place, church, and they didn't have cash. So I had to take bike. Now, it was on a Sunday. And all that. So ATMs were not opened. I was just roaming the whole area on a bike trying to get an ATM. But thanks to mobile money now, I also told you when I went to Ghana, when I found out that when I got to Ghana, you can't access more than $100, internationally. So what we had to do was send money to someone who would now give us cash.
Yes.
You send Nigerian naira to that man, he's an alaji.
Okay, in Ghana.
In Ghana.
Okay.
Then he will now
Give you
send
Ghanaian city.
No, he will now send the CD to your phone, your mobile. I think it's MTN
Is
mobile.
it MTN
Momo, they call it Momo.
Momo, MTN
Yes.
Mobile Money app.
So he will send it to
your
my younger brothers.
Momo app on
Momo
wallet.
app. Then he will now take it to the vendor and we get the cash. That was how we did it.
But it looks like it is a different situation in Nigeria. It looks like a one mobile money platform is dominating Kenya, and that is M-Pesa.
Yes.
It looks like one mobile money platform is dominating Ghana,
Yes.
which is the MTN Mobile Money app. But when it comes to Nigeria, the market is just
Booming.
open, and it's booming. In fact, it's a competition.
Yes.
It's a very high-stake competition. And we could also notice and see that in Nigeria, we see where these mobile money apps, they do not only dominate the sector, but they've equally put the conventional banking system on their toes.
Yes.
In terms of competition and competitiveness, to the extent that even among themselves, we
Yes.
can see very few of them that are not as performing as the ones you find. If you can name a few, you can name MoneyPoint.
Yes.
Opay, Pampay,
Paga.
Paga. But there are others like Kuda,
Kuda, yes.
And there are others like First Money. So I'm thinking maybe like First Money is owned by First Bank of Nigeria. No, because I like to think that way. Maybe I need to make some more research to ascertain that if because the name First Money, in Zimbabwe they use Eco Cash. That's ECO, that sound like Eco Cash or Eco. So I was wondering, maybe it was opened by Eco Bank over there in Zimbabwe.
Because the name sounds similar.
Yes, it sounded that way. Not just that, but because some Nigerian banks, have really gone outside the shores of Nigeria into other African countries. Because I'm sure if you go to some African countries, you are going to see First Bank there. You're even going to see some of these eco banks that we talked about. And they are very, very much widespread. But the thing is, if the conventional banking systems are having a tough time, or they are being put, on the edge because the mobile apps or the mobile money platforms are, very, very competitive.
Yes.
If that's the case, I think it would be reasonable for them equally to have such platforms that could attend to people in the rural areas, most especially during this inclusive drive for banking and for cash. One advantage that I see in this is that it reduces the use of the physical cash, which is...
Has it really?
I think it has. I think it has to an extent, because even though the government using Lagos State, in Nigeria, it was using Lagos State, Abuja, Rivers State, Kano, as the pioneer about maybe 7, if not 10 years ago, as the pioneer phase for bringing in the no cash policy. It was using these states as the frontier states to do an experiment for the no cash policy. And if it's in Lagos, I can say to an extent we have moved far. But there are some other places in Nigeria you go to, they just can't accept that you needed to transfer money. They only believe it, and when they see physical cash, and not just that, because they believe sometimes some of the challenges that they are faced with is lack of access to a mobile phone or lack of access to internet, and of course infrastructure, telecommunications infrastructure that need to be sited in strategic locations across the country to make the mobile money system and reform more applicable, and so that it can really, like a river, overflow the whole Nigeria. But that's not only in Nigeria, but it looks as if we are making huge strides in Nigeria more than other African countries.
One of the things that made these mobile money platforms more acceptable is that the efficiency. If you go to the market and you want to pay for something, I think they would rather tell you, send it to my OP. And I've asked so many times, and they say it's faster. They get their alert faster than when you send it to the conventional banks. I don't know how true that is, but that has always been the case. Most people prefer you send it to this mobile money apps because they feel they receive it faster. But when we get our guest, I would also like to ask, how reliable is this mobile money platform? How reliable? I remember there was an allegation back then that people were saying, "Oh, remove your money from a particular app that they are about to close down." Then there was a report that said, "No, they are not closing that." But these rumors filter. It filters the society and all that, and we really need to know how reliable are they. Then again, I think one of the things that even made it more acceptable was when we had the introduction of soft loans, where these loan sharks, when they came in, they had this enticing, offers that borrow so amount, and in 7 days you pay, and people went in. But we all saw the downside of it, unsolicited messages were being sent to their contacts and all that. And the FCCPC had to step in at a point to really put a stop to that and restrict these people from doing this. So, it has its ups and downs, but so far, I think the advantages outweighs the disadvantages.
Okay, so something very critical that you referenced is this, that where there was, if the mobile banking, we're going to speak to our guests concerned, if they are reliable or they are not reliable. Do remember that there was this clash between the mobile money platforms and the conventional banking system. And the conventional banking systems, they were, playing the card to paint the mobile apps or the mobile banking platform as unreliable, that your monies are not safe if you put your money there. And that's because, I think, that's because the mobile banking apps, really put the conventional banking platforms to the test. That
put them on their toes.
On their toes, that look, we will take this industry from you. And we could see the bickering here and there. Legislations were being thrown out here and there, and they were saying if you put your money here, you are going to lose it. Stop doing that. And but you know what? The more they came out with that, what will I call it, conspiracy, the more people keep finding the mobile money platforms reliable. So now I think it is incumbent, if not the CBN is already doing that, where they have put rules and regulation in place to make sure that this mobile money platforms are equally regulated, so that we will not hear cases of bankruptcy and people cutting away with other person's money. Well, you're still watching Just Africa, and we are reaching you live from our studios at Sook News Television. We'll have a guest join us after this break. Do join us again. Very good morning to you once again, and welcome to Just Africa. We are reaching you live from our studios, and now we move to the second aspect of our conversation, where we have a guest joining us on the program in Just Africa. We are talking about rural mobile banking in the continent of Africa and its developmental phase. We're looking at different phases and how it has impacted the economy. We welcome Mr. Sam Orovwuje, who's International Public Affairs Analyst.
Good morning.
Good morning. Welcome to the program.
A pleasure to be here.
Yes, please. So we're looking at the conversation, the topic. I'm sure you're aware of the topic we're conversing or talking about, rural banking in the continent of Africa, and how this must have impacted development in different phases, and most especially in the banking sector or in the financial inclusive aspect of it. What's your perspective? First of all, when you look at rural banking or inclusive banking, using mobile banking as an instrument for inclusiveness.
Okay, thank you very much indeed. We have to make a distinction between the two concepts that you just mentioned, rural banking and rural mobile banking. There's a distinction between the two. Okay. When you talk about rural banking, most of the rural area across Africa are underbanked. That means most banking facilities are not domiciled in the rural areas. But thankfully, with rural mobile banking facility in terms of new apps that have been developed in most recent time, then banking penetration into the rural communities has improved, what you call financial inclusion services, where rural communities can have access to some facility online where they can do their banking transaction. But when you talk about rural banking in particular, the penetration of banks into rural community is still a far cry in terms of developmental effort in Africa. But with innovation in terms of financial inclusion, using online mobile application, this has gotten into the rural community where transactions can be made. By the same token, with this improvement, that will improve on the economic prosperity. On the long run, it will increase on economic growth. Therefore, the rural online banking facility has come to stay, and there are great improvement across Africa. But maybe as we progress the conversation, be able to speak to specific part of Africa where we have a kind of penetration when you talk about rural banking, particularly from an online perspective. Okay.
So why, could you please, from your perspective, how would you look at the way the inclusive banking in rural, let's just say, yes, inclusiveness in the financial sector, most especially with banking. They are using the non-conventional system, which is the Kuda, the Money Point, the OPAs that we know about, and the conventional banks. it looks like the conventional banks were asleep. And these inventions or innovations that you spoke about, when they came in, that was when the rural bank, the conventional banks woke up and they had to copy the technology that was used by these fintechs. So how would you describe that penetration, most especially in Nigeria, that you can make comparisons with Rwanda or Kenya?
No, I think the point here is that the traditional banking institutions, when you look at the cost of putting a branch in a rural environment, it was very, very high. So they couldn't penetrate to some of those rural communities across Africa because the cost of entry into those rural was expensive for the bank, because if you look at the customer profile and the kind of transaction that take place in those rural areas, cannot justify the investment in the branch network. So that's on the one hand. On the other hand, with regulatory framework that has been put in place across various countries in Africa in terms of financial inclusion, and with the outcome of telecom that has improved transactions, whether traditional or not traditional bank, these online facilities has been able to bring to speed the level of financial inclusion or service in rural communities. Therefore, whether the traditional banks or the financial tech industry that are using online penetration strategy to get into the rural community, the banks or the traditional banks have equally imbibed those elements. But they still have their niche in the market, because where some of the traditional banks can get into, some apps have been developed in a way that it can benefit the rural communities. And some of the greatest examples in Africa, number one, come from Kenya. There's a conventional system that has been developed over the years in Kenya that has over 80% penetration into the rural community. It's called M-Pesa. M-Pesa means you can have a code and you can get into a bus, you can get into a motorcycle, what they call boda in East Africa, and you're able to pay with a code with M-Pesa without necessarily having any issue. Whether you have a basic phone, not necessarily a high-tech phone, you're able to render service. In Uganda, you have what they call a savings. Then in Rwanda, you have the Momo, which is being powered by one of the telecom company. I don't want to mention particular names because I will not be responsible for the payment of advert for those companies. Well, I'm not their spokesperson. So the point I'm making is that there's a greater penetration, particularly in East Africa, in terms of banking getting into the rural community. Produce and commodities are paid for using this mechanism, and they're able to bring their produce to the city center from the farm gate, which in effect improve productivity, or what you might call national productivity or a continental productivity. So the online banking mechanism in terms of rural penetration has really done well, thereby even reducing to a very large extent a multidimensional poverty. So, and there's a relationship between lack of financial penetration and the level of poverty in some communities in Africa. In that regard, therefore, rural banking, there's improvement. We're not there yet, but we need to put more investment so that rural communities can be integrated. But then the challenge here is the challenge of infrastructure in terms of telecommunication penetration, in terms of electricity penetration. We need to improve on power supply, telecom, so that we can improve on the rural banking, particularly from online perspective. Thank you very much.
I would like you to shed light more on digital literacy. You know, some of these rural dwellers, they need basic training on mobile financial tools. And so how do we bridge this gap, basically? And secondly, you also mentioned telecommunications. We also have connectivity issues. How do we resolve this in the rural areas?
Yeah, to a very large extent, some of the financial tech industry and the regulatory framework in terms of financial inclusion provide basic education in terms of rural community able to use just a basic phone. I talked about M-Pesa a little while ago, which is a huge success in terms of rural banking in Africa. So the rural community has been trained on how to use a basic phone to access financial services. And those operators have gone from community to community where they train people in terms of how to use that. But then a follow-up to your question, government just need to improve in terms of penetration of power and telecom into those areas. For example, in Rwanda, the basic means of communication in some rural community is a motorcycle, where even an average rider would not even want to take cash from you. He just gives you his Momo number, and before you strike your buttons, the guy is already on the move. That shows the high level of, to a large extent, the digital literacy that is involved to a limit when it comes to transactions. So basic transactions, rural communities are just trained on how to use those codes. The complexity of what you do with your online banking in the city may not be as complex as what happens in terms of financial inclusion. But in terms of basic education on how to drive those processes of financial inclusion, the education is in place, and the rural communities are able to use that to effect payment, and where even their commodities or products leave the farm gate, as it were, some of the major agents that take those products for them equally pay them, and they receive their financial transaction online, and they acknowledge the receipts. So, but what we just need to do as a continent is to scale up this process in order to impart productivity in terms of financial and improving on the poverty level, and that can translate to economic growth, which will, in the long run, improve on economic prosperity of an average African.
Okay, so when we mention names of African countries, whether we're mentioning Kenya or we are mentioning Ghana, what we most times look at, we just mentioned one name, Momo, which is championed by one of the telecommunication companies in Africa. When we mention M-Pesa, we know it is championed by some subsidiary from Safaricom, which is the major telecom service provider in Kenya and some East African nations, including South African countries. But when you come to Nigeria, we have plethora of names. We have so many names of this mobile. So how would you, if you make comparison, would you say Nigeria is belling the cat? Or just why is it like that, that maybe Nigeria is a market for as many of these companies that can find operationalization here?
No, the point here is that if you look at the population size of Nigeria vis-a-vis some other African country, we're over 200 and something million people. From that perspective, therefore, a number of operators are in line with the size of the population. So we have a plethora of online banking system, but your question initially was focused on rural mobile banking, and that's why I made example of some of those strong financial inclusion service provider. But Nigeria is an open heaven, so to speak, in terms of online banking. The African Union has attested to that in the last 2 months in terms of digital literacy, financial inclusion. Nigeria is way up there. But when you talk about rural penetration, to a very large extent, we need to improve on the infrastructure network to be able to get more of rural banking. But there's a plethora of online infrastructure that support financial inclusion. But for marketing purposes, I may not be able to mention specific names. There are many. Some are run by the traditional banking institutions who have made investment in that sector. I remember somebody speaking sometime in the past that any traditional bank that do not embrace some of this financial inclusion may do that at its own peril. So there's a congruence of both traditional banking system and this online banking system to reach the banking public. Therefore, we need to improve on the infrastructure. The regulatory framework is already there. The control mechanism in terms of banking supervision by Central Bank of Nigeria in particular, and other central banks in Africa have put processes in place to regulate the practice, particularly the credit regime, which is unwholesome from those institutions. When you take money, there are canons of lending, and there are ways you recover money. But many use sharp practices in terms of how to recover those money by reaching out to people who are in your domain. And I think the Financial Intelligence Agency has come in that regulatory framework to be able to control the way they do their recovery mechanism to get their loans back. But we are not there yet as a continent. We'll continue to improve. Those who are in charge of advocacy for financial service inclusion must up their game so that we can increase the percentage in terms of inclusion from 80 to 90 and getting to the peak of that financial inclusion services, which, like I mentioned earlier, will improve on economic growth, economic prosperity, particularly from the rural community where most of the commodity, that we consume in the city centers are produced in the rural areas. So they need to get in here, and everybody will be happy at the end of the day.
Right. Thank you very much. Now, about 60% of African population live in rural areas. So my question now is, do you see a situation whereby the conventional banks and the mobile money banks come together in collaboration? Or do you feel that this competition or the race to get unbanked customers, do you see it as a healthy one that might, in the long term, bring about some change on both sides?
First and foremost, banking is a business. That's what you call bank viability. For a bank to go into a rural community, must look at the viability of putting the infrastructure in the rural community. And the bank has an average, maybe 5 to 10 years payback period of that rural bank that has been put in place. But more often than not, with technology, you may not need the physical infrastructure, as it were, to be able to go into the rural area. So more investment will be made in terms of online banking facility. But then, to what extent can we penetrate the rural area is dependent on how government can create an enabling environment in terms of the infrastructure, in terms of incentive for banks to be able to go into those areas by investing in telecom infrastructure in those rural communities. So you don't need to put a big branch network in a particular place to be used to access banking. Then we need to dovetail into what we call the cooperative and microfinance banking sector, which are closest to rural community. To what extent can some of the traditional invest in microfinance bank, put up some incentive for cooperative collectors, what we call the thrift man who goes from one market to the other on a market day to collect money. How do we galvanize these processes into a core banking sector with a regulatory framework where both rural communities and the urban community can benefit from financial services? Because financial services is a hub of all transactions. So once you are able to penetrate everywhere, whether they are traditional, whether they are online, then we improve on the economic growth and everybody will be happy, like I mentioned earlier.
Okay, so one thing I want to consider is the fact that the traditional banking system, first of all, they didn't engage. Now they have the apps, even in their bank apps, now they are all the services that the non-conventional platforms are using to extend to the unbanked community is being adopted. Before the non-conventional system came up with this before they came up with this innovation, the traditional platforms had, stood back. They've been relaxed and complacent to an extent. No, so now we are talking about, you just said that government will need to make infrastructure available to those unbanked communities, to the rural areas. But recently, for Nigeria as an example, we just increased telecom's tariff by 50%. And for what these non-conventional banking networks, what they want to exist in the rural areas is just a mast that provides internet access and telecommunication access for the telecoms to be able to have phones, to have phone services in those unbanked areas. That's just all they need. And they will drive that inclusiveness bring to the unbanked. So now that the government has increased or give NCC, has given the leverage to service providers, telecom service providers, to increase their charges by 50%, we should be seeing more of this inclusive banking, really having it spread in the rural areas. Do you share that perspective?
Why not speaking for the telecom industry? They are in business to stay. We just talked about the challenge of infrastructure, the massive investment made by the telecom sector to be able to drive the process of telecom penetration in terms of cost structure to those businesses is so high. So those tariffs are increased in line with the current reality of those operating in the sector, because the infrastructure deficit and the kind of investment they make in terms of buying diesel to run their infrastructures across various communities is very high. Therefore, from an economic point of view, a business point of view, that increment was in line with their business reality. So what is more important is that the federal government of Nigeria in particular, and some other African country, has rural electrification schemes targeting rural development. So from that point of view, the government needs to make a massive investment in those sectors to be able to reduce the cost of operation in those areas. So in other words, once there's an improvement in the infrastructure, particularly in those rural communities, the cost of operation within the sectors will come down. That's on the one hand. Number two, the traditional banks did not really sit back. Technology is an evolving element. So when new technologies come, banks need to sit back at the boardroom to make new investments into those sectors. So constantly they are making investment in terms of digital penetration on the one hand. And most banks too, because of the universal banking license they have equally invested in microfinance banks. Some financial inclusion service providers are owned by some of these conventional banks in order to be able to get to those catchment area where traditional banking services can't get into. So they are evolving, they are embracing financial inclusion. Some of them have departments that deals with that. So from a regulatory perspective, the government need to get an investment in terms of rural electrification, in terms of rural telephony, so that people can have access to digital services which will enable the financial inclusion. I think, in my view, I think it's work in progress. And I think in another 2-3 years from now, we'll get to a level where that service delivery in terms of financial service inclusion will be up there in Africa. A lot of countries are making massive investment. 10 years ago, when we talk about financial inclusion, it looks like as if we are daydreaming. But we're there, and the penetration is improving day by day.
Great. Okay.
All right, just one more question before we go on a break. In your own opinion, how can mobile banking services be integrated into something like cross-border payments in the ECOWAS or East African regions?
I think some major service provider, I'm careful because of marketing issues. I don't want to mention specific names because I'm not the publicist who is here to speak on their behalf. The African Free Trade Agreement has made some framework that enable people to trade across Africa without necessarily using the traditional banking institutions system, where your goods can be paid for in your local currency. But then the question would be, to what extent can we scale up these processes? So people are doing trade across region, across the continent, based on new imperative of financial inclusion, where people can, whose services, so you buy some clothing material shipped from here to possibly Cairo in Egypt, and somebody's paying you from Egypt with the Egyptian pounds, and you get your money in Nigerian naira. So those kind of schemes are already there, where the rate of conversion based on the financial element, on the daily trading, whether in the commodity, whether in the FX, whether in the stock market, you're able to convert your earnings at the speed of time based on the actual day calculations, and you get your money in local currency. But then, follow up to your question, we need to scale more so that we can improve on intra-African trade. We are over 1.4 billion people. So if we're able to improve on this, that will enhance economic growth and a greater prosperity for a greater majority of Africans.
All right. You're still watching Just Africa, rather. We're going to break. When we return, we'll look at some of the challenges, peculiar challenges. We could see credit facilities being extended to rural women, and how, if this has worked well or has worked against it, the whole system. We're going to break. We'll be back in a moment. Do stay with us. Welcome back. Many thanks for joining us. We are looking at financial inclusiveness, penetrating the rural areas using mobile banking platforms. We still have Sam Orovwuje, who joins us in the program. Now, before the break, I said we are going to, when we are back from the break, we'll be looking at issues that have to do with some form of challenges. I know during the course of your speaking, you had addressed some of the challenges that have to do with a low level of infrastructure and internet services. But let's look at providing credit facilities to some of the rural, let's say rural women who carry out subsistence farming, and to an extent they need to move some of their products, the one they need to sell, back to the urban areas, and they need to be paid. Do you think that this mobile banking system has solved issues of credit facility and easy payment system?
I think when it's credit repayment or credit facilities, the level of integrity of the rural women in particular, from research in Africa, is awesome. Women in particular have a high level of repayment of credit that has been extended to them for farming, for little production at the rural community. So in terms of credit history repayment, rural communities are better than the rural people who have access to credit. But I think, if I understand your question correctly, is that to what extent with financial inclusion or financial penetration impact on the rural women in terms of having access to cash to improve on their businesses? If that is the question, I think a lot of microfinance banks, the reports are all over the place, that once credit facilities are extended to women via cooperative trade society, the repayments are always very quick. So what we should be thinking about is the level of credit that should be given to rural women to upscale whatever they are doing at the rural level, so that their return on investment will increase as well. What comes into the urban area will equally increase. based on their economic activity. Mind you, the informal sector, even particularly the rural community, are the major driver of the economy. So if you target them in terms of financial inclusion, it will improve on national productivity, economic growth, economic development, and economic prosperity for an average African. So, like we mentioned, the challenge is for government to constantly open up the rural areas. They have policy framework. To what extent can we benefit from this policy framework? And the government from time to time need to do monitoring and evaluation to see to the extent to which this policy work for the rural community. The challenges are there, but we are human first and foremost to tackle challenges. So to what extent are we able to tackle those challenges? And I do know about 20 years back where we are in terms of financial service delivery, that's not where we are. So in another 10 years, with the advent of artificial intelligence, machine tools, and all kinds of technology coming into play, we need to innovate to be able to get to that levels of financial inclusion, particularly providing credit schemes. Some development banks equally have rural credit, like Bank of Industry, that's a government agency, so we can mention the name, have various schemes. You have the Agricultural Development Credit Bank. You have the Agricultural Trust Fund that makes kind of credit or guarantee credits on behalf of cooperatives, even some individual nano enterprise. They're able to assess some of those. And even from perspective of association, you have association of small and medium business owner that equally package some credit facilities for their members.
Okay. All right, thank you very much. Just out of my own thoughts, I would like to give your opinion. Looking at mobile money banks, services and all that, are there any risk of fraud or data theft? Do you see how secured are these mobile money banking services?
I think it will be the responsibility of the mobile money banking service provider to protect their ecosystem. So there's nowhere, even the traditional banking, where you can eliminate fraud. So I think what we should be talking about, what are the kind of fireworks that the IT department have to protect, first and foremost, the data of those who borrow from them. That's very critical. And that's what the Financial Service Intelligence was able to do in the last 2 years, where you collect maybe a 10,000, a 20,000 naira from a money loan app, and maybe there's a default, maybe there's a mismatch with what you're expecting, a mismatch, maybe you're expecting a revenue to pay when it's due, and the money did come through within 1 week. If it's a normal banking practice, you just need to write to your creditor that there's a mismatch and that it should be repackaged in line with the interest element. But then everybody within your network is aggregated, and they send messages that are unwholesome. And I think that's going into the privacy of people, open people's data to all kinds of persons. So we need to protect data from the point of regulatory framework. That is being done. And the bank, to secure their risk portfolio, is to see how they can control their ecosystem so people don't get in there. So you can only minimize fraud. You cannot eradicate fraud. Even the most controlled institutions across the group equally have fraud. So you can only minimize it because you have what we call insider abuse, where people have kind of information they take advantage of, and they are involved in fraud. But all the agencies that are involved will be able to do. I think to a very large extent, they have what it takes to control their risk in terms of theft, in terms of data theft, and in terms of guaranteeing their asset, that's the loans that they give out.
Okay, so finally, in wrapping up, there are still some people who feel putting your money in the bank, either in the traditional banking platforms or in the online or mobile banking platforms, their orientation has been tailored to feel that their monies are not safe. So they are still keeping back their money under their pillows at home or one box, then they push it under their beds. And they've given several excuses to that. And to that effect, the Central Bank of Nigeria said that the money in circulation in the country, they are still trying to cut down about the amount of money in circulation, the physical cash in circulation in the country. So, and they said most of the monies are in the hands of these persons who keep back physical cash in their houses. Finally, what would be your advice to that?
I think from the perspective of central bank, education, from the perspective of commercial bank, education, microfinance bank, other fintech that operate in that industry, just need to put more education in the marketplace that when you put your money back at home, it does not improve on the entire banking system. So we need to educate more people that when they put their money into the formal channel of financial services, their money are secured. But mind you, some people have made some decision putting their money somewhere where they don't have sufficient knowledge, and those money went down the drain. And there's a particular company that's under investigation, I won't mention the name, that is being investigated by the Central Bank, Security and Exchange Commission, in terms of a lot of money that went through the systems, they were fraudulent in practice. So what you need financial advice to be able to ask questions. Where do I keep my money? The monies are safe, whether in fintech, people make deposits. If we don't make deposits into those places, there will be no money to be given out as credit. So constantly, education will help to bring the monies that people put in their tank, in their underground tank, under their bed, under their pillow. Just education will help that.
Thank you so much. It's Just Africa. We've been having conversation about mobile banking platforms across Africa, and we're glad we had the presence of Mr. Sam Orovwuje, who is both a public and international affairs analyst, joining us this morning to do justice to the conversation. Thank you so much for your time, Mr. Sam.
Thank you.
Well, on that note, we have come to the end of the show, and we're drawing the curtain right here on the program. It's Just Africa, and we are signing out, but we are not leaving you alone. We leave you in the hands of our, I call them, North Africans from Egypt, and they are bringing you uniqueness of Africa. Do have yourself a great day.
It's been a pleasure staying with us on Just Africa. I am Olumide Sokoya. Do you have yourself a lovely day.